A lot of news tends to lean, if not fall completely, to the dark side of the news cycle. Of course, that is mainly because bad news gets the clicks. Reuters is one of the major news sources in Canada, and even though they report their fair share of bad news, is their stock an entirely different story? Today, we will find out if Thomas Reuters is good or bad news for your portfolio, and we will begin right now. Reuters is one of the biggest news agencies in the world, with more than 2,500 journalists and 600 photojournalists. When you look at a news website, more often than not, you will find stories provided by Reuters. They are absolutely a cornerstone of the professional news industry. Before we scoop Reuters, let me know in the comments if you are as much of a news geek as I am. Also, if you are brand spanking new or just haven't subscribed yet to the channel, please do that now so I can keep bringing you more financial content. It's totally free and it helps the channel grow. Reuters was first formed all the way back in 1851 in jolly old England. Interestingly enough, in 1851, all Reuters did was transmit stock market quotes between London and Paris. Fun fact, before they officially formed, they used to send stock quotes by carrier pigeons. Holy banana bread. That just amuses me more than it should. By 1865, they were reporting the news, and they were the first news agency in Europe to report on the assassination of President Lincoln. Soon after that, with the invention of undersea cables, Reuters was able to report to Asia and South America. Soon, by 1923, they were reporting to the world with a new technology called radio. In fact, they were the first to use radio for news. Pretty darn cool if you ask me. From there, they grew huge, and then in 2008, the Thomas Corporation in Canada bought them, and Reuters was rebranded to Thomas Reuters. The current Thomas Reuters is a beast of a multinational media conglomerate that now operates out of Toronto. As awesome as that sounds, we are here for the fundamentals, so without any further ado, let's look at their numbers. Thomas Reuters comes with a ticker of TRI, and they have a pretty impressive market cap of $69.84 billion. Their beta comes in at a very impressive 0.27, which means they are not very volatile when you compare them to the market average. When it comes to earnings, this part impresses me a lot. Their basic earnings per share came in at 11.53 at the beginning of the year. Basic EPS is your earnings per share without taking into account sources of dilution such as stock options, convertible bonds, and convertible preferred shares. When we do take into account those dilution sources, we have diluted EPS, and in Reuters' case, it came in at 11.5. This is amazing, and it really screams stability, which is something I always look for in a long-term hold. When we look at their price-to-earnings ratio, it comes in at 33.60, which is higher than the average for their sector, which is roughly 29.30. So, Reuters does look to be a little overvalued. If you dig a little deeper, though, according to a discounted cash flow model, they are overvalued by roughly 10%. This is not a lot, and with such a low beta, a correction in price could be a slower process or maybe even slower growth to let the valuation catch up. There is the possibility that it is more of a nothing burger and that 10% is not really too relevant. In fact, they do have an estimated revenue growth of 2.75% per year, so they are looking up, if you ask me. When it comes to debt, they have a debt to equity ratio of 21.2%. And in their sector, that is not bad at all. This means their debt is only 21.2% of their equity. Very manageable and absolutely not a concern. 5 years ago, they had a ratio of 56.2%. So they have demonstrated that they are awesome at reducing their overall debt situation. Let's talk about our return on investment for these guys. And we will start with their dividends. They have a yield of 1.603% that is paid out quarterly in the amount of 44.5 cents USD. Keep in mind, there will be conversion fees on this payout. Their payout ratio is 49%, thus their dividends are easily covered by earnings, and that's quite sustainable. I will, though, point out that they have missed some dividends in the last 5 years. This is not a company I would be looking at for dividends, so that may not hold as much weight in my overall analysis. In terms of growth, in 2021, Thomas Reuters grew from a share price of $101.68 to $152.79, which is not too shabby. That translates into a return of investment of 50.3%, and adding in their dividend, the total return return for 2021 was 51.9%. That's very nice indeed. However, we have a bear market, so let's look and see how they are doing in 2022. We already know they are coming into 2022 with a share price of $152.79. As of August 3rd, 2022, their share price was $144.26 for a loss of 5.9%. Obviously, in 2022, this is a stock that has not made any money yet, and this will factor into my verdict for sure. So, what do I think about Thomas Reuters? When I look at TRI, I really need to separate the short-term opportunities or lack of from the long-term. If we start with the long-term outlook, it is good. This is a company with very solid fundamentals that I believe will have a lot of success in the future. They are not a dividend play, but there is a lot of growth potential on the other side of the bear market, and this is enough to put them on my radar. Full disclosure, I do not yet have any of their stocks yet, but I have a feeling I will not be able to say that next year at this time. If you are looking for passive income or some solid short-term growth, this may not be the stock for you. I certainly would not be looking any deeper with TRI if that was my requirement. Long-term, fantastic. Worth more research, but a short-term pass for me. Midterm, it could go either way, but I would consider them for midterm, as their outlook and lack of volatility could very well make them a quick recovery at the end of the bear market. News is a recession-proof industry, and Thomas Reuters will survive just fine. For a long-term investor, they may be that good news your portfolio needs. At the very least, doing your further research on this company is like walking back into the history of modern news, and that is way cool. This doesn't have to end here. You should check out my video on 8 stocks beating the bear market, or you can try the video YouTube thinks you'll like. You can decide who's right, and I'll see you in the next video.